Hello to everyone. This is the Startup Sales Mastery video podcast. Welcome. How are we all doing today? A couple minutes behind schedule, but looking forward to today's session. Of course, we are finishing off metrics week, measuring the metrics, also known as KPIs, also known as data-driven. And then whatever your last word is, because everything today, especially in high tech, should be data driven. That's kind of how things work. So I've been going through the little, the basics of every segment from a sales perspective. I even went into the marketing side of things. And today I'm going to touch on the financial end of things. Now, you're going to get a basic overview on the financial end of things here. The reason why I'm going to say a basic end is because let's call a spade a spade. I have plenty of accountants of financial people and I go to them. What I'm basically trying to say to you is I'm going to give you the overview, but whatever country you are in the world, you need to have an accountant basically, and your accountant needs to go through these numbers with you because the metrics from an account's perspective usually come down to two things: your P&L, your profit and loss, and then of course your balance sheet. With the balance sheet, I'm going to sort of do it the way I do it, which may not necessarily be correct, but it gets you to the correct number because we are incorporating our IP. If you're in a high-tech startup, your IP is where a lot of the value is, that and your list, of course. So you can qualify these things as assets and actually inflate the value of your company. It's kind of how it works. Again, I'm not 100% qualified to do this, but what I am is aware of what's going on. That is what you're going to get today. You're going to get the awareness. I'm wearing my shirt today, not my t-shirt, because I felt that we should be formal and in business mode. I have markers and my coffee. Always have my coffee when I do these things. So look, let's go on with it. Now, a P&L, profit and loss. I went through it yesterday. It's really not rocket science here. It's your revenue, which is basically things like sales, all the money coming in. Revenue is the fancy term for it, minus your expenses. Not a lot of rocket science there. Whether it's your, your rent, your, staff, whatever, electric, bills, anything here. We get a total for here, a total from here, do a deduction, and we get net. Okay, up here is also known as gross or brutto for my Israeli friends, and this is your net profit or net loss, depending on how your business is playing ball. Kind of simple stuff. Your phone bills, anything that you spend money out goes here. Anything where money comes in goes here. It's a revenue, even if it's a sponsorship. Sponsorship is revenue. It's money coming in. I'm using the word revenue because I know that that is the correct word instead of using sales. But when I do this, I just put in sales. So it's however you want to play it. Where is our camera today? We have plenty of room. It's a bit of a shine, but no big deal. Okay, so your balance sheet, okay? Now again, balance sheet is usually your assets minus your liabilities, okay? And that is going to equal, again, I'm not doing it the 100% full way that an accountant's going to do it. That is going to equal your liquidity. And then your solvency, there we are, is if we're going to break in our actual assets such as IP and things like that. I'm not an accountant, I'm not a financial expert, so I'm not really going to go through the actuals, and I'm holding my hands up high. I know what I'm able to do and what I'm not able to do. Liquidity, if you need to walk away today, can you walk away? That's what you're measuring here. And solvency is basically saying, look, if you really need to walk away today and sell off all your assets and everything, can you get away with it? Or are you going to go insolvent? Basically, that's what happens when you declare bankruptcy. It just basically means you're insolvent. You can't walk away, but you're going to sell off everything you can and get away as clean as you can. If you're going to do this calculation, it looks a little something like, let's say all the cash that you have and all the retail. Remember, I come from retail. This is where I learned all this. We'd put stock here, but in tech, you're not really going to have stock. So let's call it computers. So computers. Okay, we've got, although computers are supposed, we'll call it computers. Technically, this is where the solvency figure comes into play. Again, why I have so much difficulty doing this. But cash, and maybe we know we can sell off our computers really quick, minus the liquidity. We have let's say bills to creditors, service people, and maybe we have overdue staff. Okay, I'm trying to make this pretty simple. You know what your bills are and expenses are, and I'm not going into the whole thing. I'll bring on a professional accountant, but I just thought, you know what, this is startup sales mastery. This is not startup finance mastery. So we don't need to go into all these little things. We do this little minus deduction. Hopefully, for the love of God, you're going to have a positive surplus figure here, because if it's a deficit, it means you're in trouble. But if it's a surplus, then you are either liquid or solvent, and it basically means you can get away with walking away. If it is a minus figure, you are insolvent. You're not liquid, you're insolvent, which basically means if you want to walk away, you have to declare bankruptcy. Now, if one of your liabilities is, let's say, investor, invest. Now, again, there's all paperwork and rules for this. I'm only giving you the overview. I'm not going through all the rules and regulations with investors, but there are procedures in place for this. Again, if you have to declare, again, you're going insolvent, and no big deal. You should have a limited liability company, or, as I found out from my accountancy friends, an unlimited company, which basically just means that you have a private company that does not have any loans, and then you don't actually have to declare any of it publicly. It's amazing, these things you learn just by chatting to your accountants, because I asked briefly, I'm actually chatting with one of my accountants tonight. We're going through a financial, and I just got a quick heads up on how I'm playing things here. Again, I'm not really, this podcast is not meant to give you an overview in finances. You look at me and go, ooh, how does Keith know everything? No, I don't. I know how to sell, and I know everything related to sales and running businesses, okay? So when I'm running a business, I just need to know two simple things. One, how's my P&L doing? Okay, am I making profit or am I making a loss? I can calculate this on a daily basis, weekly basis, monthly basis, annual basis, or as a projection. If you saw yesterday, this is as a projection. So my P&L, highly important. What's going on? Am I making money? If, again, projection, I want to calculate, I plan to do a business. If I charge this amount of money and get this amount of customers with all those expenses, will it work? Won't it work? Running the numbers, P and L, that's how it plays ball. My balance sheet, this is the health of my company. Again, it will be tricky to do if you're in one of these R&D businesses that you're trying to put things together, but your balance sheet, obviously, you're going to have to present to an investor. You will be using an accountant. You will not be doing this yourself. You will be using some sort of a financial advisor, because this should be done right. If you ever go up to an investor without this being done right, on sheer principle, unless you're, the next Apple or PC or random technology, they're not going to be happy about it. But this is basically every asset that you have minus your liabilities, things that you owe and all of that. Can you walk away? If you're in any kind of a cash-driven business, it's going to be liquidity, okay? Liquid, as in cash. Can you walk away with a bit of cash or not? And in the startup industry, where we're dealing more with IPs and with investors and all of that, we're talking more about solvency, because we're going to have a lot more assets such as computers and things like that. That is how we run those two things. This is ending the Measuring the Metrics week with me, Keith, from Startup Sales Mastery. I help early stage entrepreneurs, tech entrepreneurs mostly, just like you, go get yourself some customers and actually win in this, startup game, because that's what we're all here for. Good luck. I wish you all the best, and I'll see you all next week for more fun and games. If you have any questions, put them in the comments. And if you need any help, by all means, reach out and, hire me, hire my team, or startupsalesmastery.com.